Alrighty, traders, good afternoon, good evening, good morning, and welcome to the AAA session, which is Ask Analyst session here with myself, Chris Pulver, as well as Tyson Clayton. We're going to get into the details of the trading opportunities this week and what we're going to be looking out for. Keep in mind that we've got some news coming out this week that we're going to be talking about. Non-farm payroll moved from Friday through to Thursday. We're going to check out and see what happens on Thursday. Non-farm payroll coming out, jobless claims. Most important is hourly earnings. All of that stuff is coming out this week that we're going to go ahead and pay attention to. So a lot to talk about. Tyson's just going to be talking about some stocks that he's keeping his eye on, and we're also going to talk about some currency pairs that we're going to be focusing on this week. Without further ado, traders, let's get straight into it. Don't forget to go ahead and post some questions. If you have any questions, post the questions. If you haven't subscribed to this channel yet, go ahead and subscribe to the channel. And if you would like to go ahead and smash the like button, we'll appreciate that as well. Smash the like button, put comments in, questions, you name it. We want to go ahead and hear from you. So let's go ahead and get started. And as usual, I'm going to go ahead and introduce to you the panel. Chris Pulver, good morning, good afternoon, good evening. How are you doing? Covered everything.
I'm doing well, Gary. Nice to be with everybody on this Monday. Hopefully it's a nice weekend, end of month, end of quarter, and holiday week. So it's going to be an interesting week to see how it plays out.
Absolutely. Always good to have a long weekend coming ahead because the markets are going to react accordingly. So, Tyson, how are you doing?
I'm doing good. It's going to be a good week. It might be, holiday weeks are interesting because they can either be really slow or surprisingly volatile. So We're going to see how it all plays out, but there's plenty of opportunity.
Listen, I think it's a big week for us this week, and the reason why I'm saying that is we've got 4th of July coming up this weekend, so we've got a long weekend, we've got the end of the month, and we've got non-farm payroll this week as well. You know, they brought it from Friday to Thursday, so everything's been compressed into 4 days of trading. I think it's going to be pretty interesting.
Yeah, no, I agree with you 100%. I mean, we also have the end of the quarter.
Yes,
so
end of the quarter.
We've got quarterly refreshing. In fact, we're going to talk about some horrific quarterly results from some blue chip players that we need to pay attention to in stocks. So,
well, you know what, Tyson? Don't keep us under any more suspense right now.
Stop the tease.
Throw it out there, man. Talk to us about what stocks are coming up.
So I've been thinking about this a lot. In fact, I have an MTI student. He's actually one of my friends on Facebook, and I kind of go back and forth. His name's Chris, great guy. He knows what he's doing in the markets, but he's buying into this whole bullish thesis. And I keep hearing this statement that I could not disagree with more. And I want to use this platform as a way for me to have a public service announcement and a word of warning. I've been trading for 19 years, and this time is not different. It is not different. The economy does matter. Price to earnings do matter. They will matter. Stocks can get out of whack for a long time, and we've heard this. You hear Kramer saying this. All these people saying the stock market doesn't reflect the economy. For a short amount of time, that's right. That can happen. It can get out of whack. But I'm telling you right now, markets will move back into proper valuations. And we are completely out of whack right now at the current levels we're at. Now, maybe we're not at frothy, extremely overbought levels, depending on where the earnings are. But we had earnings from Nike last week. They were projected to earn 65 cents a share and have a couple billion, $100 billion worth or $1 billion worth of earnings. They lost $790 million, and they had a negative 51-cent loss on earnings per share. That was a catastrophic miss in their earnings. Yes, it's due to COVID, but here's the question. Are we out of the woods with COVID? The answer is no, we're not out of the woods with COVID. Gary, you guys are in the your backyard is the hot spot right now. Yes. when it comes to COVID. And so listen, I've seen this. This reminds me, I've seen this in 2001, the dot-com bubble, when everybody thought, no, it's different this time and stocks are just going to go to the moon and who cares about earnings? No, it didn't end well. I saw this in 2007. In fact, here's a challenge for everybody out there. If you can find an old Money magazine, Fortune magazine, Trader magazine back in 2006 or 2007, read some of the absolute boneheaded, dumb A articles that were out there being written by these so-called gurus on how the market's going to continue to go up. People that are smart were writing about how it's time to buy real estate and these real estate funds, and because they thought it was different this time. They thought, oh no, you know what, this is just a little bit of a small crack. It wasn't, and it's not going to be different this time. Earnings matter. There's three reasons why stocks go up long-term, fundamentally speaking. It's because of growth. We have no growth right now. There's no growth because nobody's spending money. Now, will we get growth again? Sure, we will. I don't know how long it's going to take, though. That's the big question. Growth. Okay, so stocks shouldn't go up on growth because we have no clue what the growth is. Dividends are being cut everywhere. Now banks are being regulated on what they can pay in dividends. So dividends are being cut, or financial engineering. Those are the three reasons why stocks go up. And financial engineering is I got to buy back some of my shares to be able to de-dilute the shares, and therefore I can increase my earnings per share because there's less shares out there. You can't do buybacks anymore. Very few companies have the cash to do buybacks, so that's gone. Dividends are being cut, and we have no clue what the growth is. Not only that, but on top of that, we have about $1 trillion worth of corporate buybacks that are now gone. They're out of the market. And we have tens of billions of dollars, maybe even $100 billion plus dollars of 401k allocations that are no longer going into the market. Guys, I'm telling you right now, wake up. This is not different. So word of warning to everybody out there, this time is not different. Yes, we could go up higher. Yes, we could break all-time highs, but I'm telling you, it's going to end the same way every single bubble ends. The same when we have no growth, no dividends, no financial engineering. Yes, I understand that we're in this modern economic theory with the Fed, but by the way, we're going to have to pay that bill soon too, which means taxes, corporate taxes, and all that kind of stuff go up next year. So now companies are going to start to account for that, and so I believe the unemployment rate is going to stay around 8 to 10% because companies are going to be reluctant to hire back because they know their tax rates are going back up. So again, just cash is king, be prudent. I do have one trade for you. Nikola is an electric semi-truck developer. They went on a huge run. I had a buddy of mine tell me about this stock when it was $10. It shot up to $90 in like a month and a half. Craziness. It's trading at 67 right now. It's way overvalued. However, I can go out. The ticker symbol is NKLA, and it's a long-term Tesla type of investment. It's one of those. It's going to go through many boom and bust cycles, but I really like it long-term. And I can go out to August 21st. So we're talking 2 months or so, and I can sell the $50 put for $15. That means that my average it's trading for 68. That means if the stock is above 35 by August, I make money. So this is and it's a high quality stock. They got plenty of cash. They're brand new. The reason why the puts are trading for so high right now is because it's just went on this amazing run, and it is way too high. I don't want to buy it at 68, but I'm 100% a buyer at 35. And so the way I do that is I can go out and I can sell the August $50 put. So I really like that. So there's some good spec plays, guys, out there. There's some plays that I like, but my biggest position right now in my long-term portfolio is cash.
Okay.
So that was a long-winded way, but I just had to be aggressive on that, guys. This is not different.
Yeah, that was a great public service announcement, Tyson.
Yes.
I think people need to hear it, man. We've been talking about it for like 2-3 weeks. It's like it's frustrating to even have like the repetitive commentary. It's like it's like the Fed. It's like last week was a stress test, and it's like, oh, I mean, look at the turnaround in the stress test last week. Last week they were what was it? They were redacting the Volcker rule. Is that what that was?
Yeah.
So they redacted that. Right,
yes.
and then they go back in on Friday and they tighten it back up and say that, hey, there's no more buybacks, no more dividends. Like, so it's like you give a bank an inch, and then they're like, hey, if stocks go crazy, and they completely reset on Friday. So it was a wash after the bank stress test last week.
Well, here's the deal, Chris. I think they redacted the Volcker rule because they know that these banks are in trouble and they're going to have to access massive amounts of cash, so they can't have these cash restrictions on them anymore. So they looked forward and said, "Oh crap! If we keep this rule in place, these banks aren't going to be able to access capital. So we need to eliminate that." So they can access this capital without the rule being in place. So I think they're actually hedging themselves, and they see stuff coming down the road that maybe isn't in the public right now.
Yeah. And even though they've got access to capital, they're going to be reluctant to go here to lease or rent out the money because of the fact that things aren't quite where it should be with the economy. And like you said, they're looking down the line and saying, man, things aren't looking good with regards to how things are going to play out. COVID-19 has definitely hit the world with a huge hit from all sides.
And not only that, but again, let me bring this back to Nike. Nike was proof of how bad things can get. Again, they lost $790 million, and they were projected to make about $1 billion. They were supposed to make 60 cents a share. They lost 51 cents a share. That's a massive hit from a huge company, and it's just starting. I think that's one of probably 350 that are going to line up like that in this quarter over the next month and a half or 2 months when we have these earnings come out.
Yeah.
And on that note, really quickly, Gary, last week I talked about this in my trading room. I have this article. I'm trying to think of the source here. It might have been probably in Market Watch or something like that. So it could have been, just a collaborative source. But post-COVID market presents opportunity for stock pickers. The great divide is open between winners and losers. Tyson, you talk a lot about, on your wealth gauge, you talk about the consumer staples, consumer discretion, right? Consumer staples. I mean, think about it. What are people going to spend money on? What they absolutely have to, right? So it's like if it's food related, grocery related, those grocery chains that have good financials, or if it's staple related things that you're going to get from an online, most likely online retailer versus people going to brick and mortar versus people going to someplace in person. Curbside pickup is kind of the hybrid right now, but for the most part, people are loving the convenience of just order something, it shows up at your door. I don't want to go out. And again, it's like this is all COVID preparation, but in the U.S., I mean, we're starting to roll back. We're starting to roll back the reopenings. I've got friends in California, state of Florida, right? Is it mandated now? Mask outside, Gary? California's doing the same thing. They're closing down restaurants again. They're rolling back what was just allowed to reopen at the end of April. So it's a horrible situation to have. Just what we were 40-ish days into quarantine, and it's like reopening phase 1 through 5, and it's like they're completely kiboshing that right now. And we don't know what this is going to look like. It's not going to get any better right now.
Last thing, I've got one last trade real quick, and I just had this idea pop into my head with what you said, Chris. There is one sector that I like in this environment that's proven that it will do well, and it's actually kind of weird because I normally would want to short this in a volatile environment. I like technology stocks because technology stocks they've proven that they're the future. They're what's going to be needed if this is kind of the new norm or we're in this for a while. So here's what I like. Going long the XLK, which is the technology sector, and short the XLY, which is the consumer discretionary sector. So short discretionaries, stuff that you and I don't need, and buying technology, the stuff that, hey, we do voice over internet, we do these Skype calls, so buy the technology stocks and sell the discretionary stocks. I think that's a really good trade.
Nice.
Perfect.
Yep.
Good. And if I actually take a look at the dollar index chart right here, we're expecting some rally in the dollar index chart, and if that's going to be the case, what are we looking at? Just like you said, Tyson, cash on, right? Everyone's running back to cash again, and cash is king. So if we're going to get a dollar index rally, we're going to start seeing some big moves in JPY, Swiss franc, US dollar, and even euros part of that dollar index basket. So we're going to start seeing some rally in those. And if I go ahead and flip over to a couple of currency pairs, because that's what we're going to be talking about today, let's take a look at, in fact, I want to go to Euro. Let's go to Euro. Let's go to Euro Aussie first and just take a look at the day's trading. So far with the dollar index rally, we've had a little bit of rally in the Euro Aussie. Let's go to Euro CAD. Euro CAD had a little spike today, but it is still range bound for a couple of months, in fact. So still holding in this range. Euro JPY. This should be strong JPY, strong euro. So this actually showed a lot more bullish movement on the euro today in trade. So we had a lot of bullish movement in today's trade. If you actually look at the widget here on the right hand side, you can see we had a strong euro day today. Swiss franc lost ground, JPY lost ground, US dollar gained a little bit, and then pound sold off today. So that was the movement that we had in today over the last 24 hours. If I go to the calendar, remember traders, we've got non-farm payroll coming out this week, and the average earnings is going to be a big eye. opener right here. Obviously, that's declining very quickly. We've got the employment change, but on the unemployment rate, just like Tyson says, unemployment rate is going to tick down a little bit down. We're looking at 12.5%, but it looks like it may stay between 8 and 10%. As Tyson mentioned, there will be some jobs, but of course, not many of them are going to be hiring back again. So we've got that coming up on Thursday. And then don't forget about ADP, which is always an indication of what could come out on the Thursday as well. So we've got some data coming out this week that certainly traders are going to be keeping their eye open for and reviewing the markets based on that movement. With that being said, guys, I want to move to currencies right now. And one particular currency that I want to throw out to you guys and get some discussion around, and that is pound Aussie dollar. Have you looked at the pound Aussie dollar over the last few months? Pound Aussie dollar, in my opinion, is looking to want to blow to the upside. But if you look at the charts, let's go ahead and take a look at the charts right here. And I'm going to flip over to pound Aussie dollar right here. I find this one real interesting. Here is an upward trend line on the daily right here. I know we're in this bearish flag. You can see right here from a larger swing, we've come up from the high down to the low right here. And then it's gone ahead and moved sideways in this sort of a bearish flag. And now we're looking at the bottom of the channel right here. What is your thought on this? My thought is bullish, right? Coming off here and going back, at least it's seen a bit of a correction move based on this downward move right here. Now we've got two pairs. We've got pound and we've got Aussie. I'm going to pass it on to both of you. What do you guys think about the pound Aussie? What is going on with the pound Aussie? Why are we not seeing some movement yet in this pair?
I think I'll take this one first, Tyson. I think that this, and really we've talked about this for several weeks now. I think this is the rebalancing of the Aussie more so than it is the pound. What was interesting is even looking back in March when you saw the Aussie was extremely weak, but so was the pound. So at the top of that March level, the pound Aussie was really choppy, really volatile. And then once we had the April and May, risk on, for whatever we want to call it, risk appetite came back in full swing. Again, it was just a nice balance from what happened in March, but the Aussie was much, much, much stronger. So here we are, Aussie super weak, Aussie super strong. I think this currency pair, the pound Aussie, is going to balance back to, I'm looking at levels like 1.850, 1.90, levels like that. But I think that's ultimately because of a weakness and a balancing in the pound Aussie. And Tyson, you said it really well last week talking about the Aussie dollar. It went too fast, too quickly to the downside, too fast, too quickly to the upside. And we're trying to find some type of equilibrium, some type of fair market value for the Aussie in general. And I think that Aussie dollar is a good barometer for the other currency pairs to balance as well. So I see the pound Aussie, going to the upside, Euro Aussie to the upside. I still like the Aussie alignments to expect some weakness. I mean, currently I'm personally short Aussie CAD. I'm short Aussie dollar. I'm looking to get long Euro Aussie, pound Aussie. So I'm definitely looking for a play in those pairs.
Well, yeah, I agree. Go ahead, Gary.
Sorry, I wanted to jump to you just before we move back to you. Tyson, jump to you. I know you mentioned about the Aussies last week, but Chris just mentioned now Aussie US dollar and then Aussie CAD. Let's jump to that chart quickly and just take a look and see exactly where we're at with that and why Chris would be long on the short on both of them, right? Chris, you short on both of them looking for Aussie weakness?
Correct, yes.
Okay, so let's go ahead and jump to that chart and let's take a look over here. This is Aussie. If I go ahead and compress the chart right here, I can see that we're in fact, let me go ahead and move it over to a weekly time frame. This is Aussie CAD right here. We're in this big, large range. We haven't really found the bottom of the range right here, so we're still trying to work our way back down. But it's come inside this inside channel right here, or this range right here, a smaller range, but the bearish channel still holds. I've already said to the students that if we can break back below this level right here at 91.57, I would definitely be a big seller to the downside. Let's take a look right here. Now, give me your 2 cents on what you're looking at right here, Chris, because if I look at this, I see a wave 1, 2, 3, 4, and 5. So this is why I'm expecting a breakdown to the downside to take out the low right here at about 90.12, just because we're looking for a correction move and everything's lining up. Now, what I really like about this right now, that's not confirmed yet, but is for price to move up a little higher right here, maybe a little break out of this, and then a turnaround to the downside, and then we can have a nice little divergence level right here to confirm this on the daily. If that's going to be the case, this will be big sellers coming up. In fact, if we get this spike up to the upside and it comes back below inside this smaller range right here, I would be selling inside the range, expecting a breakout to the downside below the range bottoms.
Yeah, I think that's awesome. I mean, in fact, I like the indecision that we're seeing a lot at the highs. All I've been doing is adding little small positions at the highs around 94.15, 94.20. You had mentioned the level 91.80, Gary, something like that for a sell below. I mean, I think right now there's a lot of indecision that the last 2 to almost 3 weeks has just been very sideways, really low volatility. If we get a firm break below 9,300, I'm more of a fan of just selling. I think from 93 we can safely go down to 91. I think going down from 91, I'd be protecting profits into that final stretch. I really like 9,000 as kind of a round number, good balance point, safe number to get to. So anything that gets to 91 or below, between 9,100 to 9,100 to 9,000, I'm trapping all those profits. But from right now, I'm holding small positions at the highs. If like you said, it plays out there with that slightly higher bump and it's more divergence, and then the sellers start to come back in, I think that's a great spot to get in. Nice and high, sell it, and look for that confirmation to run for a few hundred pips to the downside.
Perfect.
Yeah.
And let's move to the Aussie US dollar. Obviously, we've seen dollar index rally. If we get some weakness out of Aussie itself, this will be a nice little dip to the downside on Aussie US dollar because of strong dollar, and then of course weak Aussie. This one is the same thing right here. The only thing on this is that, let me go ahead and compress so we can see a little bit more what's going on here. This is the only thing right here that I'm looking for right now. Once again, the same sort of movement out of the Aussie is expecting that final rally, get momentum back up here again, but then giving us that divergence level right here, and then looking to sell back down south again. So this is setting up. Look, we're going to get a correction, or we may get a correction down to 66.60, and then work its way back up again, then create that divergence, and then start selling off again on this, because we're looking for a much deeper sell-off on Aussie US dollar, but we might just need to pop it a little bit higher. I'm not saying that there's not some downside action or downside, let's say there's room for a downside move. I'm not saying that there's no room for the downside move, but I'm definitely looking for an upside move, hit resistance, and then I think this is going to be where the big play is going to be right here, up at the top. Are you currently in?
I think Tyson can analyze this one in his sleep.
Yeah, analyze
every pip, every pip.
Yeah, well, unfortunately, it's been a nightmare if it's been in my sleep. No, I'm in this trade. This is one of those. Gary, actually, I think your analysis is right, and if we do break above those recent highs, I agree that we could go up to that. Were you looking at right around that 72 level, or between 72, 73 level if we break? Yeah. So I agree with you on that. I'm hoping we don't break there. It doesn't matter what I hope. I'm in this trade. I do have a stop at on a break above those highs, and I'll save myself that 200 pips or that 150 pips or so, because if we break above those recent highs, I do see 72, 72.50. And then I think, but here's what I've been telling students. This is going to be one of those trades that the big money is going to be onto the downside. And my overall target on this is maybe a little bit more lower than your guys' target. I actually think, based on kind of the way that we broke above, I think we could see 63 or so if we get that next flush down. And I think it could coincide with what goes on the stock market. The correlation between the S&P 500 and the Aussie dollar is been 95% over the course of the last 3 to 6 months. And so if we start breaking down, then the Aussie dollar should start to accelerate to the downside also.
Yeah, I'm going to take a look at see any sort of monthly missed targets on this right here, and see if there's anything to the downside that I'm missing out on. Because if we do get a breakout to the downside, and you guys know, and I mean, Tyson, Chris, all three of us actually monitor a lot of these pivot points throughout the month. And if we take a look over here on the 4 hour, I do have a pivot point right here at the top. Now, I use these pivot points as a guideline to determine whether the market's in an uptrend or downtrend. So at the moment right now, I'm on the wrong chart. So let's go ahead and flip it over to the right chart. Here we go. All right, there we go. Now we're looking at something different. Okay, so we're looking at these pivot points right here on the Aussie US dollar. Now, if you take a look at this pivot point right here, that's at 66, around about 66. In fact, it's at 66.11. So this is we do have a missed target right here as well, and that's at that 63 level. I think, Tyson, that's the one you're looking for.
Yeah.
So this is my thought process right here. My thought process right here is that this immediate support right here could be found at 66, and then the rally up at around about 73.50, and then on once it hits that point, then I'm going to look for a much deeper dip down to 63. So that's what I'm expecting, and the reason why I'm saying I'm not just guessing this, I'm actually looking at the technicals right here on the larger time frame. So if I go to the larger time frame here, let me go ahead and show you what it looks like here. I'm going to pull up the daily, and so if you look at the daily right here, and you look at the wave structure, so here we have wave 1, here we have wave 2, this is 3. So which means that we may go ahead and dip down for a wave 4, which you can see 66. That's where that pivot point is for this month, right? 66. Then it's going to rally up to that 127 right here, which closes up or completes our 5th wave right here. When it gets to that, then it's going to go ahead and chase after the low, which is the 4th wave right here. And when it does that, it's going to go ahead and chase after that 63 level that Tyson's talking about right here. And that's going to create that little ABCD correction move down here. And so that's why I'm expecting this sort of price action to take place before we get to 6,300. So I think 6,300 is definitely a key number that's going to hit. But I think that price may move up a little high to 73, 73.50, and then come back down to 63. So that's my reasoning behind why I'm expecting those two levels, and it matches up perfectly with the pivot points that we're currently seeing on the 4 hour right here, the monthly pivot points right here. There it is. There's 63.
So Gary, question for you: What if the July target, and I believe it's going to, comes out at 69.30 above price? Does that change your thesis?
July
So
target.
in 3 days, the July target comes at 63, between 63 and 63.50. I'm sorry, not 63.
69.
I'm sorry, 69 and 69.50. And so therefore we have that level of resistance. Does that then change does that give you more confidence to the downside?
What happens if the July, in fact, this is a great conversation for next week, and I think is a great point there. So let's say
No, it's not going to come there. It's going to be. I think it's going to be at 60. I think it's going to be at 69 to 69.50. If I had to guess.
Well, we can actually take a look at the actual the tops and bottom right here. We can do a calculation quickly. But when the July target comes, this is my thought about this the July target, right, or July pivot.
Yep.
The July pivot, wherever the July pivot is going to go, will depend on that month's trading. So if price goes ahead and trades below the July target, then we're going to go ahead and hit this, and then we're going to look for a price break again here. So this might be just a pivotal point for the month where price trades back and forth above the pivot point and then goes ahead and trades up. So if we trade below it, then this will be my next support level. When we trade back above it, then we're chasing off to 7,300.
So we're kind of saying the same thing, other than so you think we're heading down to about 63 also, but just longer term we're going to see higher highs before we get down there. But over the course of the next, it sounds like over the course of the next probably 1 to 4 weeks, we're thinking the same kind of flow to the downside to that June missed or that June missed target down there.
Right. And the reason behind that, Tyson, why I'm expecting that downside move is also connecting with the dollar index right now. You look at the dollar index is at the bottom of a channel and is looking to rally up again. So we're going to get some stronger dollar index that's going to create Aussie US dollar weakness. And we're also expecting, as Chris mentioned as well, the Aussie weakness as well. So Aussie weakness, dollar strength, we're going to get it pushed back down, and we're going to get it down to around about that level. And we also got, I think, in the second week of July, we got the rate decision coming out for the Aussies as well. I believe if I look at the calendar, I think we got the rate decision coming out the 8th, I believe it is the 8th or 7th, around about there. Oh, there it is, 7th. So 7th of July, we got Aussie rate decision coming out again. Now, the rate decision, we know they're going to keep the rates unchanged. That's going to be at 0.25%. But then the statement, whatever comes out of the statement, is going to either fuel or we're going to go ahead and burn the directional bias on that pair, or at least on the currency. Yeah. So that's going to be interesting how July comes out. So we got this weekend coming up. We've got the news coming out next week, Tuesday, rate decision at 12:30. We'll see how that actually pushes it either down to that target, or we could see a rally up to 73,300. So if we don't get down to 66, then we're going to be pushing up to 73. So if we start breaking up north, if Aussie gets strong next week, then we're pushing up to 73.50. If we don't get strong, then we're pushing down to 66.
So to cap this off, I like, it sounds like we all like the short side down to 66 unless we break above the recent highs. Then we're going to look for a push up to 72, 73. And then at that level, that could be a really nice shorting level, maybe even all the way down to back down to 63.
And I think the critical, I think you nailed it right there. The critical thing right here is going to be rate decision. I don't see anything big happening this week. Non-farm payroll. Look, hey, listen here. Non-farm payroll coming out Thursday. Sorry. And if that all the data comes out on Thursday, is somewhat moving people to safe havens, which means dollar's going to start rallying, right? We're going to get weaker stock market. We're going to get dollar rally. If dollar starts rallying, this is going to push this pair down to 66. And then maybe what happens then on Tuesday next week, we get some news out of Aussie. Boom, we're back up again to heading towards 73. So I like it's like a roadmap, right? I mean, you look at this and you take all the fundamentals that are coming out and everything that's moving around, and you take these pivot points and throw in some technical analysis, and suddenly you got a roadmap of what price can do over the next few weeks, which is really interesting.
Yeah.
The most exciting thing about this is actually watching it play out. That's what's so exciting about that, is how it plays out. So that's what I'm thinking on the spear.
I like it.
All right, cool. Anything that you have that is exciting right now with regards to currency, Chris? What do you got on your plate that you're really interested in right now?
One technical pair that I think is really clean is the New Zealand CAD. If you want to bring that up, Gary, and throw on a smart pattern for me on the daily chart, I think this is a really nice trade. I think technically, and again, with two commodity-based pairs, risk on, risk off, they're both going to either appreciate collectively or suffer collectively, depending on what happens. And let's think about this. We're talking about risk on, risk off. And, I really haven't seen this type of black and white risk on, risk off trading in a long time, where it's like it's so grouped together every single, March, April, May was like the perfect time to learn about risk on versus risk off in the currency market. And I've never seen them linked this closely together. And frankly, I've never seen the Aussie like this linked to the S&P as far as like what defines risk appetite in the near term. So, let's think about the seasonality of this as well. It's like we're heading into a holiday week. We're heading into July. Historically, July is a super low and slow month. Now, August, on the other hand, is a sneaky little breakout month, and it's a sneaky little transition month. And so if we're looking for tops and bottoms, if we're looking for transitions and corrections or breakouts, that first week or two of August, as we get into the middle of it, we start to see these subtle little breakouts. And that's where I think, a better push of volatility, and that's a better push of trending conditions. I think that happens probably the middle or late part of August. So for traders that are looking for hundreds and hundreds of pips this week, I personally don't think we're going to get it. I think we're going to have, maybe through the holiday, and as Tyson said, like maybe through the holiday it can be this, really surprising move, or it's just kind of more of the same. And if you are watching the markets the last 2-3 weeks, nothing has happened. It's been very, very quiet. So I'm prepared for that, but I'm always watching. So the New Zealand CAD, I think it has a great setup. If Gary throws on the chart and goes to the daily with a smart pattern, I am short New Zealand CAD. You've got a great range to short the highs. Safe levels for me on the daily chart, if we can get price to push back down to 85.50 and 8,500. Current price on the New Zealand CAD, if I bring it up, it should be around like 87 and change. Current price is sitting at 87.71, and I'm looking for a safe level to take some profit around 85.50, 8,500. Now, I do think there's more room to the downside. And, honestly, this might be something similar to the Aussie dollar. Like it might push a little bit higher. Gary can see the divergence. If we push up one more time and have a more obvious level of disagreement and divergence, then we're looking for that trend line to break. We're looking at that divergence to give us some bearish formations at the top. And then we take that down for several hundred pips. So currently I'm short. I shorted it at the highs right around 8,800. I'm holding a few positions, and my profit level is 80. 550 or lower. Now, I mean, if anybody's looking at the chart here, if you are shorting it near the highs right now, personally, I would be happy with 8,600 or lower. It's a 200 pip move. It's not a fast moving currency pair, but it's a nice probability with a good technical setup. Full disclosure on those harmonic patterns. We've been tracking those in my trading room since last year, starting October. And the daily, the weekly, the 8-hour patterns have a 70+% probability for us as far as like paying out all the way to completion, not just one target. There are 3 levels that we look for in all those patterns, and the bottom levels are around 8,500. And so I think, again, probability-wise, we have about a 72% chance that this will pay out. I like the structure. This is a currency pair that I would trade in any condition, because it just ends up being really balanced and really technical. So I do love the New Zealand CAD for a sell trade down to 8,600 or lower. Profit levels for me are 8,550, 8,500. So that's my kind of technical trade. Eliminate a lot of the noise. It's not risk on, risk off. This is just a good technical setup.
Perfect. Excellent. I'm going to throw in let me throw Tyson. Tyson, what are you going to look at right now on the currency pair?
Well, we talked about a lot of the currencies. First of all, I love that trade setup, Chris. I think it's great. But a lot of the trades we already talked about. I set up a workspace for students over the course of the last few days that I shared in Smart Trader with the Aussie. I'm looking to sell the Aussie dollar. Pound Aussie, I think, is absolutely due for a rally. There's a nice downtrend line if we break above it. Essentially, to make it easy, if we can close above today's high. Get a daily close above today's high, whether that's tomorrow or the next day or whatever. I think that's kind of the sign that the bulls are now starting to take control. And I have a target on the pound Aussie. I think we're going to get back up. I think getting back up to 89 is realistic. So I think there's going to be plenty of profit. I think you could be in for a 1,000 pip run if we time this right. I'm already in the trade. I've been kind of front running some of these in a little bit sooner than I should have. Should have just been following along with Momentum Max, Chris, to be honest with you. But got in a little bit early on these ones. But I think I'm early. I don't think I'm going to be wrong. But pound Aussie's nice. Aussie dollar's nice. Also like the Aussie CAD that we talked about. But I shared those workspaces with students.
All right, fantastic. Yeah, I absolutely think the same thing for pound Aussie. I think that I'm surprised we haven't had a big jump yet. It may be due to the fact that we're still getting some weakness out of pound itself, but Aussie, it's got to start giving in a little bit and creating that rally. And this makes me believe that maybe next week is the catalyst for this particular pair. And a decision making as to where it's going to go, like we had with the euro, or sort of the New Zealand dollar. So maybe this could be the day. Maybe D-Day is going to be Tuesday next week on this particular pair. Now I'm jumping on. I'm still riding the euro New Zealand dollar. This is where most of my money's been put into. Is this pair right here? I'm bullish. We spoke about it last week. We started buying in. We had some nice little rally. In fact, we had a little bit of a spike in this one right here, and I was getting excited about this early last week when we had, mid part of last week, we had this little spike here. I'm like, man, I'm so excited. This is perfect. This is great. This is just what we're looking for right here. But then we had that correction move, and I'm like, okay, well, maybe it's going to come back to retest that. We had an indecision. I'm like, oh, cool, I like that. But it's still struggling. It's still... it wants to go, but it's not going as fast as I'd like to go. So I'm actually going to be watching this very carefully, because if we're going to struggle to break above this trend line going down right here, in fact, if I actually take this trend line, move it up to the highs up here, and then go ahead and draw a line going across right here, we're actually breaking a little wedge, a falling wedge right here. So you can see right here, nice little break, and now we should go ahead and start breaking up north. But normally when we get these breakouts, we normally see a rally pretty quickly, and this is taking really long to move. We don't have the divergence right here. I don't want to see price trading at a little low and get the divergence, although divergence is great. It gives us the opportunity to go ahead and still buy long. So this is a case of, I don't know if you've ever got to this situation, guys, and I'm sure you have. Everyone has got to that point where you start buying in on certain things, and then the price goes ahead and goes further down south, and you go, oh crap, I must have missed this one. This is probably the wrong direction. But what it really is doing is it's market manipulation. It's bigger banks trying to manipulate the market to make us believe, retail traders make us believe that that price is moving in the opposite direction. But what's happening here, if you actually look at the broader picture, it's actually forms of patterns. In this case now we're talking about divergence, right? Where price goes ahead and breaks below a previous low, but the momentum's still pushing up. So you can see that there's most of the momentum still up, but price is moving lower, and traders are watching price only, not the momentum. And what happens is they start they fall into the trap of believing that price is actually going to go further down south. But what it is just a temporary move, just to go ahead and this is what it is. It's where traders are buying and they're placing their stops at. And so what's happening is the banks are moving the price, or they say the big investors, the big players, are moving price below those levels where they know where the stops are going to be put at, because you know what's going to happen is those stops are going to be hit, they're going to be buying in. So they're taking out your stops to buy back in again, and that's how they go ahead and start pushing price back up again. So it creates these the divergence levels where price moves in the opposite direction once it takes out those stops. And those are where the smart money is at. The smart money is busy buying in below that level because they know price is going up. And I'm almost feeling like I'm getting caught up in this pattern right here, because we're not seeing the bullish movement that I'd like to see right here. If you take a look right here, I'm not seeing the move. And there is a bit of room still left for price to come back to retest this upward channel line right here. Yeah. So I'm looking at this and I'm going, man, am I being caught up in this again? Because if price moves back down again, it's got to move down another, let's see here, another 500 pips. Similar to what Tyson's seen with the Aussie US dollar. If it goes up, if the Aussie US dollar does rally up to 73 plus, we're looking at another 500 pip rally on that before it dips back down another 1,000 pips. So if it does drop back down, we're going to go down another 500 pips, find support, and then look at the momentum right here. Momentum right now is just going to go ahead and give us a little dip, and then it's going to continue to rally, giving us that divergence we want to see here. And then, so price does that, and then starts going up. That's going to be the buy level right here. That's going to be the hot spot for the euro New Zealand dollar, because there's no doubt that we're looking for a correction move on this. It's just a matter of timing. And the one thing that we have to focus on is the perfect timing when it comes to these type of trade setups. No one can really get the best place. But I've always said, guys, you've heard Tyson and Chris, you've heard me say that, when it hits support, I'm selling. When it hits resistance, I'm buying. And we use automation in order to be able to filter out the trade, because the automation has got certain parameters in that says, hey, listen here, even though we're at support or even though we're at resistance, unless, of course, the parameters within inside the logic of the EA or the system, the trading robot that we trade in, if that's lined up, only then we'll take the trade. And so that filters out all the noise for us and then puts the trade in once the conditions are lined up. So at the moment right now, the reason why I am a buyer is because we are at a level of support. And this level of support is coming from this downward channel right here, or at least this downward trend line right here. It's tested the backside right here, it's come back. Price is tested it right about there. So I'm at support. But if this support doesn't hold, then the next support is down about 500 pips. And we'll look to buy back in again at that level. Now, will I let my trade ride all the way down to 500 pips? Probably not. I'll probably start cutting my losses. I'm in the money right now, so I'll probably start cutting my profits at the moment right now. But I've got to see price trade up around about 75.91. So 75.91, that's a October high right here. Right about there is October high. I want to see 75.94. 75.94. I want to see that traded above. If I can get above that, then I'm going to feel a lot more comfortable holding on to the euro New Zealand dollar, and probably go ahead and chase after 85.19. That's going to be my target to the upside, 85.19, and that's recording a wave one high. Well, is it a high? Yep, it is a wave one high, and it's coming off this high right here. So that's what I'm looking at on the euro New Zealand dollar. I'm really excited about this. If we can break above that 75.94 level.
So Gary, if I'm not in this trade, if I place the trade, so what do you think of me placing a buy on a break above? So not yet. So once we get that confirmation break above, place a buy there, stop below that consolidation level at about 73, and then save myself if I get stopped out. Save myself about 100 pips. Put another stop or another buy at 72. with that target of that 85. So basically buy on the break above, stop at 73. If I get stopped out, buy again at 72 and ride it all the way up to that 85 level.
Absolutely, absolutely. We've got a lot of our EAs, a lot of our trading robots and our systems that we build are all based on having levels where we can go here and say, I'll buy above that level and I'll sell below this level, which is great to have because these are the type of levels that we're talking about, and that's perfect like you just mentioned, Tyson, is that when we look at this type of thing right here, because prices are struggling to break above 75, 93, you would want to only wait for price to break above that. Now, what is price breaking above that? You have to be really sure that price is breaking through that level and confirmed it. How do we confirm that? Well, what I do is I wait for a daily candle close above, but also I'm looking for price to trade above and then come back to retest. Then I'm going to go ahead and look to buy from that level. So I would only want to buy above that. Now, if you're using systems that have their own logic in to determine the buy and sell signals, then that's fine. Then just say, hey, above this level, I'm going to go ahead and buy. And then once we're above that level, if the system has the logic that's lined up, it's going to buy. And then stop losses will be either built into the system, or if you're doing manual trading, of course, you'll place your stop losses below this level right here. That's when you place your stop loss. If price breaks back down here, then this was a false break, and then price is going to come back down to the next support level, and that's where you go ahead and buy again and look to push your price down, your stop losses down here. So just like you said, Tyson, that'll be a perfect game plan to go ahead and trade. And the reason why we want to buy above 75.94 is because we've got so much upside possibilities right here. We've got about a 400 pip rally to this level right here, and if it breaks through that point, then we're looking at price going up all the way up to the 85 level right here. So that's another 600 pips going up. So we've got 400 pips there, another 600 pips there, and then at that point we're expecting price to move down because of this range. So we'll have reached the top of the range, and so now we're looking for price to move all the way down. And I think this is where the smart money is going to be selling off big time, because you have about 2,300 pips off that high, and then if it breaks that level there and gets down to this, we have another 2,300. So you got about 5,000 pip opportunity once we get up to around about 85.21, and that's where the big sellers. I'm going to be a huge seller at that point, because I think there's going to be a lot of money to the downside on that move.
Yep, I agree.
And you guys all know, right? I mean, we don't have to be a master of 28 currency pairs. We just need to be a master of one or two, right? And we can sit on one or two currency pairs and focus on those and look for the opportunities and trade them. And the reason why you want to go to two is because if one currency pair is not quite doing what it should be doing and it's moving sideways, you can go to other pairs. But then you also got the option that if a pair is range bound, then go down to a gear down approach. What is a gear down approach? Well, if you're trading off a 1 hour time frame, go down to a 15 to a 5 minute time frame and trade those swings back and forth between the range. It's going to be a smaller time frame, it's going to be quicker trades, but you're still trading the range in a trending based format. So you can trade trends with inside a tighter range by going down to lower time frame and trading a gear down approach. So those are the type of things that are really good when it comes to, and we've had this a lot of times in the trading room. We've got traders say, well, I only got X amount of dollars in my trading account. I can't trade, more than five currency pairs, or maybe even more than 3 currency pairs. And that's okay. You can do that, but you have to go ahead and play more like a gear down approach on these pairs.
By the way, real quick, I think we have a solution for that these days. So maybe somebody should attend the 4 p.m. and 7 p.m. client webinar if they can, because I think maybe there's a prop trading solution for that for students that don't have access to enough capital. So
absolutely,
just a little hint. Got to get that plug in.
Yep. So go ahead and make sure you guys get into those webinars, because there's a lot of information there that's going to help you to be able to get access to bigger funds. So absolutely. Dead right there, Chris. Guys, you want to go ahead and close off, Chris?
Sure. I will add to the prop trader, because also I'm teaching a class on it this week. So if you join us for the webinars today at 4 and 7, you'll be in a class with me on Wednesday. So you can learn more about that. It's a huge opportunity that I think every trader should give it a go. I mean, it does you. It's no risk. I mean, it's no risk coming out of your pocket to fund an account. It's fully funded account. So learn about it, and we'll have some more information in the webinars. As far as this week, I think set the right expectations. For us to sit here and have a good session like we did today, but to get antsy or to get anxious, it's like, look, prices are doing much. It's summer. It's probably the slowest time of year. but it's going to change. Just like we said last year, November, December, get ready for more volatility. This year, we got all the volatility that we ever wanted. But of course, it was a lot of volatility, and then it was suppressed. So we are going to have this like quick expansion, contraction. The market's going to be reactive. It's going to be this living, breathing organism that we have to figure out how to navigate. So there's a ton of opportunity ahead. For this week, let's be patient. For the weeks ahead, we're going to see some transitions. We're probably going to fall in line, and we'll have the technicals we talked about for several of these last weeks of Ask an Analyst and the stuff in our trading rooms. Things are going to happen, and we're going to be right. We're going to be right on direction. We're going to have game plans to tackle it, to trade it. We're going to have plans to, work through a drawdown if we're in one. We're going to have plans to stay in the current direction and ride the momentum. But, as Tyson said, this is not different. So what is coming, what is likely coming, is going to be things that create a lot more volatility, a lot more extremes. And if you have a trading strategy that gets you into trouble in high volatility and extremes, you need to be listening. You need to be careful that high volatility extreme should be something you should be profiting from, but that may take a different style of trading. So I, for one, want to be going with the direction, with the confirmation, as opposed to trying to guess the tops and bottoms, because when the market's irrational, it doesn't care. It doesn't care. It does what it wants, how fast it wants, wherever it wants, and you're either on the right side of that or you're not. And I know that we don't want a lot of casualties in this trading world. We teach a lot of traders. We educate a lot of traders. We want people to come out of this very profitable and very confident. So that's our plan.
Sure.
Yep.
Absolutely. Well said there, Chris. Tyson?
I've just got three things. It's three things that I'm going to look forward to doing for myself, and maybe you guys want to adopt this. It's I'm going to raise cash. I'm going to preserve capital in any positions that I'm in right now, and I'm going to be opportunistic. I'm going to look for opportunities to deploy that cash because they're going to come fast. And I like the Aussie pairs. I like in the stock market, I'm going to for sure raise cash and be more prudent about the stocks that I want to trade. There's amazing stocks out there that are going to trade to awesome long-term values again. It might take a month, it might take 2 months, it might take 6 months, but we just got to be patient. So again, raise cash, preserve capital, and be opportunistic.
Perfect. Fantastic. Now, listen, I'm going to say this much. Get into the trading rooms. You see what Chris is talking about, and Tyson and myself. Get into the trading rooms. Get more involved, because there was one of the students that actually posted a message on one of the social media websites that really resonated with me. And what he said was, I'm going to use my own words, but what he was saying is that if the trading rooms are generating as much profit and pips every single month, every single week, and you've seen the testimony, you've seen the results Chris, Tyson, and myself have shared with the students via social media. If the traders are making this much money, we're closing out just so that, over 30% return, over 5,000 plus pips this month in the hybrid trading room. You've seen Chris's results, you've seen Tyson's result. Now again, if students are making this type of profit, and look, I'm not expecting them to make exactly that amount, but if they're gaining some profits from these trading rooms, then get involved. Why wouldn't you want to get involved? Now, next week, as we start the first week of July, next week, inside the description, we will have the links to the trading room. So you can go ahead and check out the links, check out the trading rooms, get involved, get access to the trading rooms, get involved, because you're going to make so much more, you're going to be so much more happier, and the progress of your training and your learning curve is going to be so much more elevated when you get into the trading rooms or the trading rooms. So make sure you guys get involved. So that's going to be my advice for you this week. Get involved, speak to your account reps, get involved. I think that pretty much wraps it up. Tyson, Chris, thank you very much for coming in. Really appreciate it. It is a short week for us traders, but is going to be pretty active this week with fundamentals. So we'll check out the fundamentals. Don't forget non-farm payroll coming out on Thursday, and it's going to rock your world as you head into the 4th of July weekend. If we don't see you before then, you have a fantastic 4th of July weekend for those that are celebrating, and we'll see you back again on Monday, same time, same place for our next session. This is the FX Big Dog and the team saying cheerio.